All right, everyone. Welcome back to our live trading session for the month of December. Obviously, this is the end of the year, and it's going to be a very interesting night for the NFP numbers today. All right, let's check with the audio. Seems to be okay from my side, but if there's any issues, do let me know. Everything else should be coming through okay. Good morning, good afternoon, good evening, wherever you're from. Glad to have you guys here for our final live trading session in 2024. Well, we've got one more CPI next week, but yeah, this is the last final NFP numbers for this year. All right, my name is Vida and Jetta. Let's get started for our NFP numbers tonight. Just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involve risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Okay, so as per usual, you're going to have the promo code TW deposit bonus. I'm going to show that to you in the next slide. And you should already have access to the private Telegram channel if you have attended our previous sessions or yet registered through the website. You should already receive that email, Telegram link on your email. If not, pretty sure the team here is going to help you out if you need that Telegram access, okay? Or you can contact customer service anytime you want and get them to give you the link. All right. So this is the code. It's Nonfarm 2024, and as you can probably see, it is ending on the 31st of December 2024. If you have been saving up this code for 2024, I think it's about time you start using this code before the year ends there. All right, so this is to W deposit bonus, and the code again, it's Nonfarm 2024. Okay. All right, just a little bit about myself. My name is Vera Injaro, and I've been a full-time trader with over 20 years of experience, 22 to be exact. This year, it will be 23 in a couple of months, and I've also been a professional trading coach and technical analyst since 2007 for brokerage in the US, Australia, as well as Japan. My expertise is actually in the Ichimoku Kinko Hyo technique, which we have already covered in this channel before. You can actually look it up, Japanese charting techniques. If you search through the channel here, if you want to find out more about what Ichimoku is and how you can actually use that to help in your trading. And I've also been invited as the guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association. All right, cool. All right, so we're going to cover a few things. Obviously, we're going to talk about the theory first. A rundown is we're going to talk about who the BLS is, what is the NFP, what is the unemployment rate, what is the US average hourly earnings. There are actually three sets of data that we're actually going to be looking at tonight. It's not just the NFP. And in particular tonight, the unemployment rate consensus, that's kind of conflicting with the gain in the NFP number. So it's actually going to be very interesting, and I'll tell you why. The number itself, it's kind of conflicting, okay? So who is or what is the Bureau of Labor Statistics? So basically, the Bureau of Labor Statistics, it's the US federal agency that collects and disseminates various data about the US economy as well as the labor market. They do prepare all the other data that you are going to be looking at, like the PPI numbers as well. But yeah, in particular, they also collect the CPI, which is the Consumer Price Index, which is the inflation index. That's something that we're going to be covering live next week as well. That's going to be on Wednesday, right? That's going to be on the 11th, okay? All right, so then within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture, and this is the reason why we call it non-farm, right? Anyone that's not in the agricultural sector is going to be counted into the non-farm payroll, and then we're obviously going to be looking at the unemployment rate. So we do have the ADP NFP numbers, which was released on Wednesday. The ADP NFP numbers are actually a separate, different set of data compared to the one that's released by the BLS. So this is the official government release in terms of the NFP numbers. That's the one released tonight, today, this morning in the US. That's by the Bureau of Labor Statistics. The ADP is actually a private company that does payroll systems, so they do have their own sets of numbers as well. All right. So, at the very beginning of the year, the agency basically publishes a calendar with the release date for the entire year. So it's not really an excuse to say, oh, I didn't know that the NFP is actually going to be released today, this week, whatever that is. The calendar, it's pretty much ready for you to view. I think by the end of this month, they should already be publishing the calendar for next year anyway. All right, but and just to keep things simple, the unemployment data is basically published every first Friday of the month. If it falls on a holiday, publication usually postponed to the following week and occasionally on the Thursday of that week. What we normally see is it's basically in the month of March, because February it's a short month. It does get pushed back to the second week in March in terms of the NFP releases. Okay, the inflation data is typically published on the following Wednesday after the labor market data it's released. So yeah, that's why we're going to be trading our CPI, which is going to be on Wednesday next week. All right. Hello. Good evening for those that just joined in. Okay, so now let's talk about the non-farm payroll. So what is the non-farm payroll? It's basically a report that's monthly released by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment. So if you're self-employed or you run a home business, that's not going to be part of the numbers, right? And non-profit organizations, if they have a new hire, they're not going to be counted into the NFP numbers. Okay, now, market analysts and investors basically look for NFP figures above 200,000 to be more of a positive sign or of a healthy job market and a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. Now, I believe last month when we traded the NFP numbers, there wasn't a lot of reaction during the NFP numbers itself. Why? It was a low NFP numbers, but it was more or less a predicted NFP numbers. Okay, so that was actually due to the hurricane that happens in the US as well as several strikes. Okay, so we are looking at a little bit of a normalcy to return this month. If we look at the number this month that's actually released today, we're actually looking at last month's number, but we're looking at a kind of a normal number. We'll take a look at the previous number. It was actually really low at 12,000, I believe. Yeah, the previous number was actually 12,000. Last month was actually at 12,000. We are expecting 200,000, and the numbers has been gaining. It was fluctuating. I think if you go to several different trading economics, sorry, not trading economics, economic calendars out there. I'm using trading economics, but if you go to investing.com, they might show you a different number, which is 202,000. So the consensus has been fluctuating in terms of the NFP numbers tonight, but the consensus more or less is that we're expecting a number that's actually close to 200,000 here, which is going to be a significant gain compared to last month's number at 12,000. Okay, so the NFP data is actually a crucial indicator of the state of the US labor market and can significantly impact financial markets itself. A figure that falls below the market expectations may be viewed negatively, while one that exceeds expectation may be viewed positively for the US dollar, all right, or at least for the American economy. So anything that's positive for the American economy, that's likely going to boost the US dollar. That's going to put pressure on a lot of stuff out there. So the NFP figures are basically closely watched by traders and investors, in particular the forex market. This is kind of like, what's the biggest monthly news release? That's basically just going to be the NFP numbers, the CPI, and then the interest rate decision. This three is basically the three main things that forex traders are going to be looking at every single month. Okay, so currency pairs that's directly related to the US dollar is going to be highly impacted by this. The Euro USD, the dollar Japanese yen, dollar Canadian, Aussie USD, dollar Swiss, sterling, pound USD, cable, right? Those are going to exhibit high volatility in response to the report release. So this is going to be the main focus for a lot of you guys tonight. We are typically ignoring a lot of the currency crosses. So like the pound AUD, Euro pound, pound CAD, Euro CAD. Those are currency crosses. They're not directly impacted by the US NFP numbers, but it's more or less a secondary impact there. But yeah, we're going to be focusing a lot more that's directly related to the US dollar itself. Okay, so again, the release date is going to be a special time for many traders who have learned to successfully use special non-farm strategies, which is something that we're actually going to be sharing tonight. We have actually done the theory session for news trading yesterday. If you missed out, feel free to check out the theory sessions. We explain a lot more on the order types that we use there. So during releases, basically there's going to be a strong changes in quotations and even trend reversals. Algorithms of technical analysis kind of stop working for a little bit, so we have to use a different strategy. It's not going to be a normal reaction in the market, okay? Now, according to the BLS, the non-farm employee classifications basically account for approximately 80% of the US business sectors that is actually contributing to the GDP numbers. So if we have a healthy labor market, then yeah, we are kind of expecting the economy to be strong, and the growth in that economy is going to continue because it kind of contributes directly to the GDP numbers, okay? So again, the best assets for non-farm trading are going to be the Euro USD dollar, Yen dollar, Swiss, Aussie USD, New Zealand USD dollar, Canadian sterling. I have no idea why I haven't keep adding that pound USD in there. Gold is also going to be highly impacted as well, but oftentimes it doesn't work the same way as if like, okay, if the US dollar kind of strengthen, it has to impact the gold in, you know, a more or less a negative correlation. As if it's on the other the other majors. It's not going to work that way. It's kind of a little bit tricky with gold there. But yeah, it is going to impact gold prices as well. All right. The second set of data we're going to be looking at is the unemployment rate. It is calculated in percentage, and it is published at the same time with the non-farm payroll report as well. The unemployment rate represents a proportion of the labor force that is currently not employed, but they are capable of being employed, right? So the US unemployment rate is actually determined through a survey of just approximately 60,000 households. It's not really a huge sampling size for the US population, you know, compared to the whole USA. Only 60,000 households is going to be surveyed for the unemployment rate, okay? There are reasons for that because according to the US Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job, obvious, right? They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. So basically criteria 1, 2, and 3, if we take a look at it, where's the data from? The data basically comes from, you know, anyone that claims unemployment benefits in the USA. And this is the reason why we look at the weekly unemployment claims to kind of measure what is the unemployment rate going to be for the month, okay? So if a person doesn't meet this criteria, they're not considered unemployed for the purposes of calculating the unemployment rate. There was actually a question during the Q&A session last month, and someone was actually asking, are immigrants going to be part of the unemployment rate? The answer to this is that depending on the classification of that immigrant, right? If they have a permanent residency, for example, or if they have a citizenship, then yeah, they could claim for those unemployment benefits. They could be part of the survey done. But if they're not able to claim the unemployment benefits, then they're not going to be part of this survey done. So the answer to that is depending whether that immigrant is actually legal or illegal. All right. But yeah, this is the unemployment rate. And the third set of data, it's basically the US average hourly earnings. And this is also released by the BLS alongside the unemployment rate. This measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. So economists, investors, and traders basically closely monitor this report, as it can actually offer valuable insights into the state of the US economy and its potential impact on inflation, right? So this set of data is not going to be useful now. But because the CPI is going to be released next week, it is actually really interesting because if we have a jump up on the US average hourly earnings, then I think market is going to start pricing in the potential for a higher inflation. Okay, and that's basically why we're looking at these numbers anyway. So we're basically looking at the changes in wage growth rate per month. It can basically signal shifts in the labor market and potential inflationary pressures. Why? Because the higher than expected wage growth may indicate potential inflationary pressures, which can result in higher interest rates and currency appreciation. Logic here is that if the average hourly earnings goes up, then the consumer's buying power increases with that. There is a potential for them to actually spend more, and that could push inflation up. This sort of inflation is basically what we call the cost push inflation, okay? So if it does go down, then yeah, it might actually indicate the potential for inflation to kind of go down because they have less buying power. Then all of this starts affecting the interest rate decision, which is going to be done this month by the FOMC, and the expectation is for a cut to happen this month. That could lead to the US dollar depreciation if the inflation number goes down. All right, but we'll talk more about that next when we talk about the inflation numbers. Okay. All right, so again, with any economic report, it's important to consider a broader economic context and the other indicators when trading based on the US average hourly earnings data. Okay. All right. We're early, so no rush here. So I'm going to talk about a couple of non-farm trading strategies that a lot of people employ. Number one, you can actually trade the NFP, kind of a week before the NFP is actually released. A lot of traders has been trading that this week, and it's basically looking at the anticipation for that NFP numbers. So this approach basically involves opening positions in the days leading up to the NFP release, with the expectation that the market will begin pricing in the NFP outcome here. So basically, if you do this, you want to close the positions before the actual NFP release to avoid extreme volatility that can actually follow through with that. Now, with this month's number, let me just go to the month's number first before we talk about the straddle strategy. A lot of traders actually are not in the 200,000 consensus, right? Part of that, it's actually really more on a lot of traders here looking at this, and they look at 12,000 last month, and is it really going to be a huge jump up to 200,000? And I think that's more on them not understanding how the NFP numbers is actually correlated, and the reason why it was actually really low last month. But yeah, again, I think right now a lot of traders out there pricing in for the NFP numbers. You can see the market reaction here. The US dollar has been weakening a little bit this week. I think a lot of traders actually don't believe the number is actually going to be at 200,000 or close to 200,000. So yeah, they're kind of not fully pricing in for that potential 200,000 release. The other thing is the unemployment rate. The unemployment rate has been fluctuating this week. If we take a look at the outlook that I published on Monday, it was still at 4.1% in terms of consensus. There were early signs of the consensus being 4.2%, but back about Monday, I think everyone wasn't really fully pricing in the potential for the unemployment rate to go up to 4.2%, which is actually really interesting right now. And the question is, can this number actually go up, right? And to answer that, there is a potential for the unemployment rate to go up to 4.2%. The reason being is the previous month's number with the NFP number, that was actually really low at 12,000. We don't know the impact after the hurricane. Is it going to last for more than a month or two? Is that going to affect people returning back to their jobs, or are there going to be businesses that are still affected by it and stuff like that? This is the reason why the consensus was a little bit higher on the unemployment rate. So coming into today, if we take a look at the numbers here, we're going to be looking at the NFP numbers to gain significantly to at least above 190,000 to 200,000, but the unemployment rate could potentially go up with it. So we're looking at more or less an expectation that the numbers tonight could actually be a mixed number. Okay. The average hourly earnings is expected to come back down to 0.3%. I don't think this is actually a big deal because numbers has been fluctuating around 0.3% pretty much every single month anyway. But the year-on-year number is expected to go down a little bit to 3.9%. Okay, so this is a little bit, I'll come back to this in a minute, because I do want to talk a little bit about what we are actually going to be doing tonight. We're basically going to be straddling the market. So the straddle strategy basically involves placing two pending orders, a buy stop and a sell stop. We discussed this in the theory session yesterday, above and below the current market price just before the NFE release. That way you can potentially profit from a strong price movement in either directions. And once one of the orders is actually triggered, you have to immediately cancel the other order to avoid being exposed to further market fluctuations. So just keep that in mind if we're going to be trading that tonight. There are criteria for this straddle strategy to work. Basically, the market needs to be in a range-bound market condition, or at least in the accumulation phase. We need to see a little bit of a corridor of volatility that kind of limits the range of the market. Looking at the charts right now, I think we already see more, a little bit of a movement happening, at least on sterling here, in terms of the movement on price that might not be suitable for a straddle strategy. We'll go through that in a minute. But yeah, any questions so far in terms of the anticipated data for tonight? What is the potential scenario? The potential scenario that could actually be super profitable, right? Because we already look at the US dollar kind of weakening as people prepare for the labor numbers tonight. The NFE numbers, if it overshoots above 200,000, or even at consensus at 200,000, I think that's going to be a really good boost for the US economy. That's going to be a huge boost for the US dollar. But what really needs to happen tonight to be, really a strong push for the US dollar is the unemployment rate to stay stable at 4.1% or go down to 4%. The best surprise would actually be an unemployment rate that actually comes in at 3.9%. That's going to be a huge boost for the US dollar, because I think market might not be pricing in for the unemployment rate to go down. Okay, that's scenario number one. Scenario number two, market could come in as the consensus here, and this one here is going to be very tricky. Is if everything comes in as per consensus, right? The NFE numbers at 200,000, the unemployment rate increases to 4.2%. This is where we are actually expecting a little bit of a whipsaw to happen. We're expecting a little bit more of a choppy market condition. All right, so this is scenario number two. We actually don't want to see the number come in as per consensus. We prefer surprises, okay? And the third scenario that could actually weaken the US dollar would be the NFE numbers fails to even meet the forecast that we have here at 194,000. I would say any number that's actually below 180,000, 190,000, that could actually be a little bit of a pressure for the US dollar. And also, if the unemployment rate jumps up higher than 4.2%, for example, if it jumps up to 4.3%, then yeah, it could actually weigh significantly on the US dollar, because the expectation is for the FOMC to look at the labor condition to not be as strong and go with that rate cut this month here with that 25 basis points rate cut. The reason why we're looking at a little bit of a mixed price movement is because we have been hearing comments from the FOMC that they're not really in a rush to start cutting interest rates, okay? Okay, so we got about 5 minutes here. Let's just jump in and let's start marking out our positions here. So take a look at the pound USD. Again, with the pound USD, we actually don't have that corridor of volatility. I might zoom out a little bit. You can see what's going on here. The market has already been, moving up per se, right? So we actually don't have a movement in kind of that range-bound market condition. So if I were to go into the 50 minutes time frame, I can kind of push myself to open. All right, we can do a buy stop here, right? About 1.2785. That would be it. In terms of the sell stop, we can do the sell stop here. We do have a little bit of a floor here. That floor is actually going to be below 1.2742. So the sell stop can actually be about 1.2735. That's basically the sell stop that we want. Some traders might even do the 1.2750. So for tonight, we actually might do the 1.2750 on the pound USD. So buy stop and sell stop for this one here is that 1.2750. on the sell stop, and the buy stop is going to be at 1.2785. Okay, that's for the pound USD. The euro USD, this one here is it's okay. At least it's showing up a little bit as, you know, kind of more of an ascending triangle at this point in time, though, if we take a look at the movement on the euro USD here. The euro USD for the buy stop, we're gonna place it a little bit higher. We want it to be at 1.0605, just in case, or, you know, even at 1.06, right? And for the sell stop, we want to keep it close. This is going to be at about 1.0560. That should give it enough range. That's basically last night's price movement on the Euro USD. So, and that's basically how this has been traded for today. All right. So for the Euro USD, your buy stop is going to be at 1.06, and your sell stop is going to be at 1.0560. Dollar yen. This one here, you want to have the buy stop a little bit higher. You want to have it at 151.25. This is not going to be for everyone because this is going to be extremely volatile in terms of range. And the sell stop is going to be below 149.50, right? So about 149.50, that's basically your sell stop on the dollar yen. So about 75 pips between the sell stop and the buy stop. All right, so buy stop at 151.25, sell stop at 149.50. Aussie USD, we're not going to be trading the straddle on the Aussie USD. Price has been pushing down lower. So yeah, not really too keen on the Aussie USD. Same thing with the New Zealand USD. I don't think we can actually straddle New Zealand USD at this point in time. For gold, this one here is going to be a little bit tricky, but you can have a buy stop about 2,646, right? Let's place it at 264. Yeah, about 2646. That's about right in terms of the buy stop. For the sell stop here, you are gonna have it about 2,631. That's about it, or at least about 2,631.50. That's it. That's all we can do. Dollar Canadian, you can do the Dollar Canadian here. Dollar Canadian, you can do the buy stop. 1.40. 14090 on the buy stop here, right? Dollar Canadian, and the sell stop, it's going to be at about 1.4. Okay, you want to give it a little bit more distance there because it is a huge number. All right, number's going to get released anytime soon. Dollar Swiss, you're not able to straddle this. One more that you can actually straddle, it's actually the US 30. I'm just not sure if I have it here. Let's just jump in very quickly. Hopefully we have time before everything moves. All right. Yeah, this is already out of the range right now. So the US 30, you're not going to be looking at that. All right. So these are going to be your positions for tonight. And that's pretty much it. We're just going to be waiting for the numbers to be released soon. Okay. All right. Standing by. New Zealand USD, not straddling the New Zealand USD. We're just not able to do that on New Zealand USD as well as the Aussie USD. So we got pound USD, Euro USD, dollar yen, dollar CAD, and gold. Okay. Hoping that the NFP number is above 200,000 and unemployment rate below 4.1. Likewise. Yeah, I just said New Zealand USD. We're not able to straddle New Zealand USD. Ah, okay, it just shot up. And what is the number? All right, 4.2 unemployment rate. All right, so we have that higher unemployment rate happening. And what's going on with the? So we got pound USD and Euro USD triggered. I'm gonna close those two. Everything else is still within range. NFP was high, 227,000. So expect a little bit more of a choppy market here happening right about now. So we're expecting a little bit more of a choppy market condition happening. Right? Not really seeing the Euro USD being pushed up higher here. And NFP number was just released, 227,000, way higher than consensus. So we do have a little bit of a mixed number here. Average hourly earnings. Let me get it right. Year on year is at 4%. And the month-of-month number is... okay, let me just get the month. Average hourly earnings at 0.4%, which is, yeah, stable. We don't have any changes on the average hourly earnings. It is at 0.4%. But yeah, so things are moving up, and we'll see what happens here. Okay. Yeah, I don't think it is a sustainable trade at this point in time. I think a lot more focus on the NFP gain was way higher, 227,000. Let's take a look at something else that was triggered here. I think gold just got triggered for a sell, so I'm going to close gold buy here, right? But a Euro USD and a Pound USD, I don't think this is actually gaining enough traction at this point in time. It's actually going to be very interesting. We might actually be able to fade some of this, which we'll talk more a little bit. Dollar Canadian, no breakouts out of the range. Dollar Swiss, not really dropping down any lower at this point in time. US 30, also a little bit flat here. Dollar Yen, not really moving out of the range that we have here. Yeah, it is more or less a mixed number. But yeah, I think it's a huge recovery. And also, last month's number was actually revised up to 36,000 from 12,000. So yeah, it wasn't actually as bad as what the market was kind of looking at. So we'll see what happens here. We'll just wait for maybe about 2 minutes and see the initial reactions. See if there's actually any potential for a fade happening here. But right now, this is actually gaining up really quickly here. And it is pushing up higher right now for the Pound USD and the Euro USD. There are a couple of resistances for the Euro USD and the Pound USD. So just to keep that in mind. Okay. All right. So yeah, still gaining. The Euro USD is still gaining. The Pound USD is still gaining. 1.28 for the Pound USD. We're expecting a little bit of a resistance building up here around 1.28. So that's going to be about where the R2 is going to be located at 1.28 20 level for the Pound USD, and also for the daily time frame on the Pound USD. If we take a look at the movement here at 1.28, it's basically representative of the R1 on the weekly pivot itself. Okay, so that's basically that. And yeah, not really looking at any strong progress at this point in time. We're gaining, but really not significant at this point in time. It's only about 15.6 pips on the Pound USD and the Euro USD. Might actually want to fade the Euro. I'll just wait for 1 more minute, and then we might actually fade the Euro. We do have that spike on the Euro USD here, but we might actually try to fade the Euro soon. Depends on the 5 minutes or the 15 minutes time frame here. The number is actually good. Unemployment rate is actually not that bad, in all honesty. 4.2% is actually not a huge jump up. And, for all the reasons out there, it still met consensus at 4.2. It's not like it's a super bad number, for example, shooting up above 4.3% or anything like that. It is at 4.2%. So the unemployment rate is as per consensus. The NFE was an upside surprise. So I might fade this. Not too keen on this one here if we don't see a significant gain. I think there's still going to be some resistances building up. Look, with the euro, especially with the euro, what we're looking at here, it's basically the range around 1.6 to 1.6025. That's basically kind of the cap on the Euro USD at this point in time. If it's able to surpass that level on the hourly time frame, then yeah, it might continue to gain a little bit more. But if it fails at 1.6, that's actually a strong psychological level in by itself. Same thing with the Pound USD. If we look at a Pound USD here, we are actually going to be looking at the area about 1.28. and 1.2825. That's basically the area that needs to be surpassed by the pound USD. But if it fails there, I'm really looking at potentially fading what we have here. So yeah, I'm actually going to close out on the Euro USD and the pound USD trade, and I am actually going to fade this. And likewise with the Euro USD, I much prefer to fade this. And in terms of stop loss, I'm going to have it a little bit higher, about 1.0650 level as our stop loss. Because we're fading this, we are really anticipating a potential for more of a break for this support trend line that we have here. So yeah, I want to be targeting somewhere lower than that. In terms of how far I'm actually going to be targeting that, we are probably going to be looking at about 1.0550 and potentially even lower, right? 1.0525. This is going to give us a good risk reward ratio, and I prefer to fade this just because we're so close up top there. For pound USD, really thinking about 1.2840 just to give a little bit more room. I know I said we want to go with 1.2825. But just in case, we want to give it a little bit more room here. And also for target level, I want to go a little bit higher here on the daily time frame. Take a look at the reason why I want to have it about 1.2840. It's basically this area here. So we kind of have that fair value gap, right? So that's basically about where we want to have our stop loss, just slightly on the upper end of that fair value gap, in all honesty. So yeah, about 1.2840, I think that should be a significant level itself. So for the pound USD, I know we're tracking on the daily time frame here because I do want to find the targets that we have. I'm not going to be targeting crazy numbers here. We're probably just going to be looking at the low for last week, about 1.2625. You can see it is going to give us a really good risk reward ratio here. So I mean, I prefer to fade this because no matter how you look at it, I think the number is actually not that bad, in all honesty. Data for Canadian numbers. Canadian unemployment rate, it is a little bit softer at 6.8%. It's a 0.3% jump out from last month. But yeah, that's the unemployment rate for Canada. It was a little bit higher. Let me just show that to you here. So we're looking at this number here. It does come in with 6.8%. So it is a little bit higher. Okay. Okay. Yeah, it is still as expected number. So NFP was basically just the one out there. May I know the slide you use to see economic calendars? I use Trading Economics. I find this to be a lot more informative as well, especially if you guys are learning about fundamentals. You can actually click and open it, and it'll just explain to you what these are, right? What's the number, kind of the summary, quickly updated. You can also look at the previous numbers there. You can see that jump last month. This was revised up. Previously it was at 12,000, and it was basically revised up to 36,000. So you can see the fluctuations there. October number was low, and we don't see a lot of movement because it was kind of expected for that number to be on the lower side. Okay. All right. So yeah, let's see. What do we have here? Pound USD continued to push up, but we're not really looking at any fractions at all at this point in time. Gold prices just bounces off. I think it just it kind of just takes the order and it just bounces up here. We haven't set a stop loss for gold here. We do want to set it up. We don't want this to go anywhere beyond that high that we have there. And but yeah, I'll keep that stop loss there. Risk reward ratio, I'm probably just gonna go with a 1-to-1 risk reward ratio, about 2,617. Not hoping too much on gold here. Might actually get stuck on gold for a little bit. All right. So yeah, pound USD, kind of holding on there, not really moving anywhere. The Euro USD likewise. And again, the stop loss, we have it at 1.0650, and that should give us, quite a bit of a room there if this is to gain. But yeah, let's take a look at all the other stuff there. Dollar yen flat, not looking at anything. Again, I'm not sure about all the other yen crosses. Is it going to be impacted? Not really. Yen crosses are not going to be impacted directly, and you can see the sterling yen and euro yen just holding on strong here. It's just the US dollar that's kind of being pressured at this point in time. So should we keep the sell stop and the buy stop for the dollar yen at this point in time? Actually, we might want to lower the buy stop here if you want to, but this is already post-news trading. I don't think we're going to be looking at a potential fade, but I do like that buy stop there, about 151. Yeah, I still want to have it above that high there. 151.25, that's going to be your buy stop? Yeah, unchanged. Sell stop, I would probably cancel out this sell stop on the dollar Japanese yen. You can have it there if you want for the sell stop. Dollar Swiss head and shoulder pattern on the 4-hourly time frame. Let's take a look at Dollar Swiss on the 4-hourly time frame. Is there going to be a head and shoulder pattern here? A little bit skewed, but I see what you're looking at there. So that's going to be that there. And I think by distance, if we broke the neckline, which is going to be here, a little bit skewed, right, as I said, because we kind of bounced this off twice. But yeah, I think it's okay. Now let's measure top head shoulder, about 87 pips. Let's measure 87 pips down for this one here. I think we are approaching basically the target there. So a little bit too late to jump in on dollar Swiss at this point in time. Yeah, I'm not really looking at a lot of traction here. Aussie, New Zealand USD do see a little bit of a bounce here. But again, we just can't straddle the Aussie and New Zealand there because we don't have that range bound market condition on the Aussie USD and the New Zealand USD. Dollar Canadian still stuck there. Dollar Swiss, not taking dollar Swiss at this point in time. Again, we're not really able to straddle dollar Swiss because it was already dropping to the downside here. We're just adding a little bit more pressure here. But yeah, on the 4-hourly time frame, head and shoulder. I think if we measure the head and shoulder there, the distance is basically just about there, right? So is that 1704? About 87. I think it's about 87. 165 pips. I'm sorry, it's 165 pips. Okay, so we actually might be able to still have a little bit more here. No, it kind of hits the limit on the head and shoulder because we always look for the distance between the head and the neck to find our target level. So this is already, the ship has pretty much sailed for dollar Swiss. All right, US 30 is actually very interesting. I'm actually keeping an eye out on the US 30 here. It's just that the range bound market condition that we have here on the US 30 is actually on the daily time frame, and it's a very small range. This could actually break either way. I don't think this is actually tradable on the hourly time frame though, so just keep that in mind. US 30 as well. This is gaining a little bit, but it depends on the hourly close on this one here. But yeah, other than that, I'm not really looking at a really strong push or anything like that on the pound USD and the euro USD. In all honesty, I actually still have one fade on the euro USD. I'm looking at the pound USD to actually potentially add more on the fade here on the pound USD here. I was setting up my stop loss a little bit close at 1.281. That got triggered, but we'll see what happens here. But yeah, I'm liking a fade in all honesty because if we take a look at the risk to reward ratio that we have here, let me just bring up trading views so you guys can actually see what the risk reward ratio is. So if you fade it here on the pound USD, your risk is actually really small because that's basically the fade, right? So your stop loss is going to be a little bit higher, 1.2825, right? I have it at 1.2825, and we're targeting let's see, 1.2625. 1.2625. It means the risk reward ratio, it's huge. Right. So it is about 1 to 5 in terms of risk reward ratio. So is it worth the fade? In all honesty, yeah. 30 pips for 150 pips plus. I think it's worth the fade. Euro USD likewise, it's actually stuck at resistance 1. This is kind of the planned trade from yesterday. In fact, if you attended our theory session, we were kind of looking for price to come back up to 1.06 and set up a limit order at 1.06. This one here, if it closes like that, then yeah, I think it's worth the fade. Your stop loss is going to be a little bit higher, 1.0650. Reason being, I want to have it just beyond that 1.0640 in terms of R2 for daily. And target level about 1.05 for the euro, 1.0525. Yeah, it's worth it. 1.0525 is basically about the support one, about where the Ichimoku cloud is. So that's how far I would go. It's still going to give you a good risk reward ratio. Not 1 to 2, but it is what it is in terms of the range that we have here on the Euro USD. Gold just being gold. So yeah, this is the current condition on gold. So it's just kind of stuck there. And for as long as it's actually stuck inside the Ichimoku cloud, it's actually not a really good scenario to trade gold. And this is something that we already mentioned on the Outlook on Monday. If it stays inside the cloud, it gets really choppy. And you really don't want to be in that trade or anything like that. If it breaks below the Ichimoku cloud, then yes. I think a lot of swing traders are going to jump on that on Monday and probably take that down even further there. But yeah, I think initial reaction, you can see the fade happening right now. And if you guys are wondering, what is the fade this guy's talking about? So basically, you have a different strategy here. Basically, the fade involves waiting for the NFP numbers to be released, and you basically observe the initial market reaction, like what we did, right? We were looking at that breakout, it wasn't really sustainable, data just came in. You take a look at the numbers here, we had a surprise to the upside for the NFP numbers, no surprise for the unemployment rate. So technically, it's actually a good number. So this is something where we actually want to fade, right? So once the initial volatility subsides, we already passed the 15 minutes mark. You want to look for opportunities to trade against your initial move. And the approach is based on the idea that the market often overreacts to the NFP data and that retracement or potential reversal is likely to follow. And I'm more on the reversal side. What we have also been doing is also doing a post-NFP trading. So we were looking for this, right? We were waiting to fade the move. We're kind of looking at the market. What's likely going to be happening? Take a look at the data. The underlying is actually still a strong labor numbers. The FOMC would come and say, hey, unemployment rate goes up a little bit. It's not as bad. We're not exceeding 4.5%. We're not even exceeding 5%. Overall, I think it's a strong labor number. They're going to mention that the NFP gain was strong. They're going to say that the labor market is stable. Long-term trend for this is that, yeah, it could be beneficial for the US dollar. So yeah, long story short, we're basically going to be looking at that reversal happening there. And also take a look at the 50-minute time frame here. If we close 50 minutes in like that, we're going to have a ducklet cover. And if you take a look, there's actually a slight gap, very slight, about there. So this could actually form a ducklet cover, especially if on the 50-minute time frame, it closes back down below 1.2780 on the pound USD. And on the Euro USD, this is it's already forming that right now. Again, we at least want to see a little bit of a piercing number. And the other thing by volume, if you take a look at the volume down here, we're losing a lot of volume, right? So a lot of traders are actually like, oh, what's going on here? They're not acting on the volume, total volumes that we have here. What we have on that breakout number, that was a really high volume at 12,626. Previous one was about 2,373, right? On every 50 minutes, is average is about above 1,500. This one is surged to 126,000. Volume right now for this one is about 3,000. So yeah, we'll see what happens here. All right, dollar Canadian just got triggered. So yeah, I think I'm gonna close the sell stop on the dollar Canadian. And market is stabilizing. Gold is plummeting down again, and we're about to be in positive again. So we'll see what happens. Pound USD and Euro USD wavering a little bit because the candle is about to close in about 10 minutes time. But if you take a look at the 5-minute time frame, you know, price has been pushing down lower and it's actually below range right now on the 5-minute time frame. Pound USD on a 5-minute time frame, we're not looking at any patterns up there. In all honesty, I wouldn't consider that a potential evening star, not even on the Euro USD. Also not looking at here. Okay, dollar yen flat. I think a lot of traders just want to avoid dollar yen at this point in time. We're still a little bit on the edgy side in terms of how the Bank of Japan is actually going to act this month. Are they going to be hiking? Are they not going to be hiking? And what's really interesting here, numbers for today, wages actually goes up in Japan, but spending goes down. So this is where the confusion happens. People are actually earning more, but they're not spending that money. That could actually lower inflation a little bit. So this is a little bit of a conflicting view in the Japanese economy at this point in time. But yeah, we'll see what happens here on dollar yen. Aussie USD, not looking at that momentum gain. New Zealand USD, likewise, we're not looking at a new high or anything like that. It kind of surpasses the movement last night or this morning after that drop there. But yeah, it is what it is. Dollar Canadian, dollar Swiss. Dollar Swiss is being supported about 87.50. If the hourly closes at 87.50, then I might actually consider going long on dollar Swiss, you know, just in case. All right. But yeah, for everything else, that's about it. Let's see what how the market closed in 7 minutes time. Take profit and stop loss for the pound USD. Take profit and stop loss for pound USD. It's we showed it about 1.28. Stop loss is going to be at 1.2840. I don't want it to be too close because I had it too close and I got one position closed out. This take profit is going to be at 1.2625. Depending on the situation, we might be able to extend that. The Euro USD, your stop loss is going to be at 1.0650 and your take profit is going to be at 1.0525. That's going to be your Euro USD and a pound USD stop loss. All right. Gold, in all honesty, I do expect a more of a choppy condition on gold here. So, you know, if you're not in gold, I wouldn't go for a new trade in gold. You know, the trigger just now, the sell stop, it was really more on the very end there, picked it up and then just went back up. It is a choppy market for gold here. Not really too keen on gold at this point in time. Getting go for parity on euro. You know what? You know what's going on with the euro? You see how that the French government basically just collapsed on itself. They're going to be looking for a new prime minister and whatnot. Macron is not really holding up strong. I don't know how this is actually going to be impacted, but the funny thing is it should be negatively affecting the euro. A lot of traders were already expecting that the French government is about to collapse, so it wasn't really that big of a surprise there. It's months in the making for that. Euro just closed below 1.06, so I can secure my fate. Yes. With the euro, if it drops back below 1.06, would it be a secure fate? Yes, but because we have the support trend line as well on the Euro USD, right? You actually want to have your buy stop a little bit, your sell stop a little bit lower, about 1.0575, if you want a higher confirmation. But yeah, if it takes your sell stop here, you can actually modify this, and your stop loss, you actually don't have to have it at 1.0650. You can have it at 1.0630. I think that should be enough. That's about there. And target level is going to be at 1.0525, right? So that's a modification that we have here, about 1-to-1 risk reward ratio if you wait for that break below 1.0575. The euro is actually really interesting, being that it kind of fails at 1.06, right? And if it drops down below that support trend line, gives you another potential entry here. You know, just on we fade about 1.06. If it drops down below 1.0575, we could actually add more position to that. So you got a lot of options on how to actually trade the euro. The pound USD, it's a little bit more, it's a little bit trickier. You can see with the trend line on the pound USD, it's really, you have a couple of trend line because you got one there. This is validated because it touches 1, twice, 3 times, 4 times, 5 times, and we also have this one here. So it is going to be a little bit trickier on the pound USD because we got 2 support trend lines that needs to be broken for it to kind of just collapse and reverse on itself. But every single break below that support trend line that we have, that's actually an opportunity to go short. So the first one here, it's about 1.2750. You can actually have a sell stop at 1.2750. And then another one here, it's going to be about 1.2725, just below 1.2725. So you can actually have 2 staggered sell stop here. So all in all, you have about 3 stop losses, sorry, 3 sell positions that can happen. I would go with a sell stop strategy instead of a limit strategy. I don't expect price to go up any higher at this point in time, because if it goes any higher, then all the other potential sell setup that we have on the pound USD could be jeopardized. Okay, so just keep that in mind on the pound USD. What's the stop loss for those 2 sell stops? Well, the stop loss is going to be about that high there at 1.2825. Target level, we're going to be looking at 1. This one here, if it drops below the second support trend line, it could very well go back lower than 1.26. But yeah, just for the same, for the sake of having stop losses, I do want to have it a little bit lower. Risk reward ratio is okay, and for this one here, same stop loss, we're gonna have it at 1.2825, and your target, this one here, is actually going to be a little bit lower, 1.2550. So these are your potential positions on the pound USD. This one here, you can actually layer your positions, and yeah, once one of the support trend line it's broken, right? So the way we look at this for the pound USD, if this hits your stop loss on the current position for a fade right now, then we are going to cancel our sell stops. However, if we are successful in the fade and price breaks below one support trend line and the second support trend line, then it would actually gain momentum really quickly. And this is the reason why I don't mind having those sell stops down there to position 1.2650, 1.2625, just because we do have this trend line to be broken. And also, take a look at this. Let me just draw this for you. So we're just working on really simple support trend lines, right? There's actually a third trend line here that could be broken, but I'm not adding positions to that because it's so close to our target at 1.26. So, but yeah, if one support trend line is broken, second support trend line is broken, there's actually a huge distance to the third support trend line, and this is the reason why I don't mind layering a position on the pound USD. The drop on the Aussie USD is because I know for the Aussie USD, I'm not too sure about New Zealand USD. We're not really paying attention to New Zealand. But the drop on the Aussie USD is because on the interest rate decision from RBA next week, they're expecting a little bit of a dovish comments coming out from the RBA. So that's basically it. Dollar yen still in the range of market condition. We're not really expecting anything. I think the candle just closed, and you can see the Euro USD. It is about 1.26, 1.06. Sorry, is it holding on there at 1.06? I think it is. Yeah, it barely just manages to hold position above 1.06. Pound USD, it is below 1.28, so I'll keep the trades that we have. Oops, what happened? There we go. So We got Euro USD, we got Pound USD, we got Dollar Canadian. Those are the three positions that we have here, as well as gold. And then we have more stops on sell stops on the euro, right? We got one sell stop at 1.0575. Pound USD at 1.2820, sorry, 1.2750, 1.2725, and the euro dollar yen's buy stop and sell stop. I'm actually going to cancel out on this one. All right, this is the trade that we're going to be looking at. So, if this is too small, you might want to screenshot it and zoom in. But that's basically it. I think there's a lot more sell stop on the Pound USD. This is current plan on this one. I want to fade this one. I want to see price drops down. Try those support trend lines to be broken. And once those two support trend lines are going to be broken, then yeah, it could potentially be a free fall for the Pound USD to the third support trend line, about 1.2625 if it happens tonight. Otherwise, it's going to be about 1.2650 on Monday. All right. So this is Euro USD, and yeah, it looks like the fade it's currently working. Yeah. All right, guys. We're gonna be out of time for this week, so this is the code again, Nonfarm 2024. We are going to be wrapping this session for tonight. So yeah, we're going to be skipping the Q&A sessions. I think we already answered a lot. I think a lot of you guys already left the session anyway, but code is Nonfarm 2024. With that, let's wrap it up for tonight, and I'll see you guys next week for the CPI on Wednesday. Have a fantastic weekend.